So instead of being bid at 88.80, now the bid is 88.78. Now you may say that should be illegal, or I don't see how he can do that. Well, remember, the market maker's objective is to match up buys and sells. And of course the ideal would be the buy and sell being matched up with orders from an outside source. In other words, the ideal situation for a market maker would be having a sell order come in and then having a matching buy order. That way the market maker can simply match the two orders up and take on a zero risk transaction. The second scenario would be the market maker simply accumulating a storehouse at lower prices, understanding that prices are going to rise in the future. How does he know this? Order flow, as I'll demonstrate here. Let's say, for example, these sell orders start to come into play here at 88.80. The market starts to decline, coming down to 88.70. There are no orders between 88.70 and 88.60. As the market comes down to 88.70, because of the vacuum of 10 pips here, the market is going to gap down. This gap down, let's just say for the sake of argument, causes additional sell orders to come into the market at 58, then 55 and 54, then 53 and 52. And finally, when the market gets down to 51 and 50, the market starts to hold. Now, because no additional orders come into the market maker is free to either mark price back up or to match orders at the current price level. Now, let's look at both examples. Why would the market maker want to move price back up? Well, for a very specific reason. That market maker is going to want to try and sell at higher prices because this market maker has purchased all the way down. Well, what has just happened is the 88.50 level has now become support. And it became support simply because that's where the orders exited the market. In other words, nobody was really interested in selling at 88.50 or lower. Now, it could also mean that there were enough buy orders to simply fill all the demand at the levels 55, 54, 53, 52, 51, and 50. In other words, every time somebody at one of these price levels wanted to sell, there was another buyer simply waiting to snap up his inventory. Every time the price went lower, somebody out there bought. And then finally it reached a point where there were so many people buying that price had to stop going down. So, support has now been put in at 88.50. Now remember, what I was talking about here were lower prices. And more specifically, lower volume. Now, why would low volume be important? Now, let's go back to our chart. Now, as we're looking at trading, and remember in our example I was saying how price was coming down, and then eventually enough buy orders came in to stop price from going down? Well, once price has stopped going down, the market is going to retest, and retest. There are very specific reasons why. Now, if you were trying to buy here, wouldn't you want to sell somewhere above that price in order to make a profit? Seems kind of like 6th grade logic, doesn't it? Well, if you're trying to make money